Hi, folks. This is Lee with the Market Sense for the week of November 19th, 2019. The charts in this presentation are provided to us by Gettess and come from their Trade Navigator software. And this is a weekly bond market chart, which is showing some signs of life, kind of like this. After we had this exhaustion bar down a couple weeks ago, last week remained inside to that, which just means that some form of consolidation is taking place. And it looks like they're trying to break out of this inside bar to the upside. Given that our momentum indicator is still rather weak, that could mean that this upside target here, the upper moving average around 160.16, it could mean that that would be a reasonable place to look for resistance and possibly to sell. There's a chance that the projected high, that's the blue line that they're bumping up against right now, around 159.28, 29, right in that area. There's a possibility that that could hold them, but the fact that they're breaking out of this inside bar makes me a little hesitant to just aggressively sell. I might keep an eye on them to see if they begin to stall there, but the 60.16 area would interest me a lot if they get up there. Doesn't mean they can't blow right through here. I mean, the exhaustion could turn around and this momentum indicator could turn positive, and that would be a good sign. Maybe they're going to test the highs again. But at this point, I still am expecting them to find resistance in here someplace, and I'll be looking to see if they can do that. Stocks, I don't really know what to say about this. This has to be the most impressive but boring run to new highs that I've ever seen. The relentless nature of that move up is just fantastic, but the size of those bars are so tiny. Look how tiny they are compared to everything else. It's like there's nothing going on except they just keep going higher. They haven't even been to support for like 5 weeks now. So this week they seem to try and make the high first. Now the projected high this week is up around 30.34, and they didn't, or 31.34, I'm sorry. They didn't quite get there, but close enough to make me a little nervous as they turn down. The upper moving average, which is the highest potential support for them, is around, let's call it 30.94. Not sure I'd be interested if they get down there. Again, they haven't been down there for several weeks, and just getting down there after going higher first would be a little troubling. The middle moving average is just below 30.80. Let's call it 30.79. But they could, these highs back here in the middle of the chart here, these are the highs that they broke out from to start this move up. And they're down in the 30.25 to 30 area. So a move back down into that vicinity wouldn't be unusual at all. So very difficult to determine if there's any of this upper support that should hold. But I'm going to keep an eye on it to see if it does, because, again, look at this relentless nature. You got to figure it'd take something to get this momentum of the upside reversed. There's no frothiness. There's no excessiveness. It's just grinding relentlessly higher, and very difficult to argue with that. I may not find a good place to buy them, but I am definitely not that interested in selling them. If they make a high here, we'll get another opportunity, I think. So that's what we've got for you today. I hope you can find something profitable to get yourself in.